Hello guys, so today I want to talk about the bearish rising wedge pattern. So basically this is this one right here, and what I'll be showing you is a live example of such a pattern. This happens in a case where there had been a bullish rally and a reversal is almost taking place. So let's go to our chart and see an example of the bearish rising wedge pattern. So I've identified such a pattern in AudNzd where you can check it 4-hour time frame, 2-hour time frame, 1-hour time frame. You'll see the same pattern. So the ideology of the bearish rising wedge pattern is that it always tries to print higher highs, but it's falling momentum. And every time it breaches a higher high, it doesn't go very far away from the previous higher high. So meaning that the bullish momentum to push prices higher is reducing. So back to AudNzd. So we have this high right now. We have this higher high. We have this higher high. Then we have this low here. We have this higher low. We have this high low right here. So let's look at the wedge pattern. So you connect the swing highs first. Then the swing lows. So there's our first swing low and the other swing lows right there. Remember, these are swing low. This is not the swing low because after this swing low, our next swing high is right here, and this low is higher than this, so this is not a swing low. Okay, so now you get to see the similarity between this pattern and this pattern right here. Let's draw it. Okay, so these are swing high, swing low, swing high, higher low, higher high, higher low. So how do you expect that this pattern will behave? First scenario, this pattern will reject. It has started rejecting the lower channel of the wedge. So what we expect is that this price will come all the way up and form another equal high or spike slightly higher to form a M pattern so that it can reverse. So we expect the prices to push all the way to this level, then they come and break to the low side. Okay, so expect that the prices will come they will push their way higher to reach the new high. They form an equal high with divergence in the momentum indicators, showing that bears are almost coming in, or else it pushes to this level and then comes and breaches down. So our first opportunity will be around this place. If it starts rejecting, if it forms an M pattern with divergence of price and momentum, then we'll expect to execute our first short position around this place. The next short position that we'll be taking is after it has breached the wedge pattern. Then after it has breached the wedge pattern, what we'll be expecting is a retest of the trend line, then a bearish rally. So we'll be expecting after the breach. So our first entry will be when it forms an equal high with a divergence of prices and momentum. That is where we'll be expecting to take our first position. The next position is after the breach of the wedge pattern, we'll be expecting a retracement to the trend line of the wedge after rejection, which will be around between Fibonacci 50 to 78. It's where we'll be expecting to look for rejections to consider taking our second position. Okay, the other thing is, how do you take your profits? How do you measure targets? So for me, I basically measure the the, the thickest part of where this pattern started. So from here to here. So that is from here to here. So I'll just same distance is the distance that I always measure after retest. Once the prices have reached and they have retested, is the same distance that I'll measure to take from the level of entry to my target profit. Okay, so the distance from here to here is the distance I'll measure once it has breached out, retested. That's the first distance that I'll measure. You understand? So that was basically a live example of a bearish rising wedge pattern. You can see an example using candlesticks. This is a line chart, obviously. These are the candlesticks, and here's a live example of such a scenario. So I think we're done. Let's see how the market plays out within the week. It's 2-hour time frame, so I expect that this pattern will actualize within the week. Because today's on a Tuesday morning. Right now we're in Asian session. So let's see how the market plays out within the week. All the best in your trading. So our first entry will be expecting at around the same equal high. Once you notice divergence of prices and momentum, then it will be a safe place to execute our first trade. As I've said, the second position will enter once the prices have breached out of the wedge pattern. We'll be expecting a retest. Then we join the second move. So that's it for this pair. Audi New Zealand. Let's see how it plays out in the week. Yeah, thank you.